What's going on, y'all? Welcome back to the channel. It's your always grateful host, Jeff Rose, and this is the Wealth Hacker channel, where we are dedicated to teaching you new ways to build wealth that is not taught to you in schools or by your parents. And I'm out on another wealth walk doing some reflecting and thinking about what are the two investments that I have invested in personally that have made me a multi-millionaire. And when I started doing some reflecting and identifying what these two were, one of them, pretty common, you'll hear this from other multimillionaires. The other one is a bit different. So let's go ahead and break these down. What is the first investment? Well, it is investing in the stock market. No surprises here. But when I started thinking about my own investing journey, you have to realize, for those that are new here to the channel, if you are, be sure to smash that like button, subscribe, all that good stuff. But for those that are new to the channel and don't know the story, I didn't come from money. I did not inherit $1 million. That's not how I became a millionaire. I didn't inherit 2 million, invest it and lose half of it. No, like I came from literally broke parents.
Oh yeah, don't ask me for money.
Broke financially, broke, I won't say emotionally, that might be kind of harsh, but I did not get the financial lessons that I needed to become a multi-millionaire from them. Both of them filed bankruptcy, not once, but twice. So for me, like not knowing how to invest, it was me going to school, getting a finance degree, and then beginning that journey of understanding investing. So when I started investing, I didn't have a lot of money.
Mom, Dad, how come there's suddenly no money?
I started investing $25 a month into a subpar mutual fund. And from there, I began to learn what it meant to invest. So that's how the journey started. It didn't start with thousands of dollars, hundreds of thousands of dollars. It started with $25 a month coming directly out of my checking account, going into my Roth IRA. And that's how I started. And just getting that exposure to investing, getting exposure into mutual funds and how investing works, like that's how I started to educate myself. And from there, compounding interest is a beautiful thing. I mean, it truly is a beautiful thing.
It was perfect. Perfect. Everything, down to the last minute details.
But if there's something that I did do different that you don't hear a lot of, oftentimes you'll hear investors say that they put their money into the S&P 500, they bought index funds, and that represents 80-90% of the portfolio. I can confidently say that I have never, I'll make sure I'm correct on this, I have never purchased an index fund. And the reason being for me was I always thought, okay, if I'm looking at an S&P 500 mutual fund and there's 500 companies in there and the S&P 500 is not adding companies to the index until they've reached a certain capitalization size, well, wouldn't it make sense to buy these stocks before they get added to the S&P 500? And not that I'm like a magic stock picker, but I just started doing my own research and investing into companies that I was partial to, that I believed in, that I used their products. And I think I've shared this before, but like one of the first stocks that I bought was Under Armour stock. And at this point in time, I don't wear a lot of Under Armour clothing, but the time that I invested into Under Armour, I was deployed to Iraq and I was wearing a lot of their clothing because it was 130 degrees in Iraq and I needed something to keep me cool. So at that point in time, I was actually deployed to Iraq when they came out with their IPO. So it made sense for me to invest in Under Armour back then. And I bought that inside my Roth IRA. I bought it several times, and this is before, they're kind of struggling a little bit now with their stock price, but that was back in the time where I was able to lock in a lot of gains. And I did so inside my Roth IRA, so everything was tax-free. And from there, it was investing into other growth companies that just worked out really well. Visa, Facebook, just a few that I bought. And those were all mostly inside my Roth IRA or in my retirement account, where any gains that I made were either tax-free or tax-deferred. And that's one of the reasons why I talk about the importance of the Roth IRA, why it's such a big deal. But that strategy alone, and one of the reasons I was able to do that is because I had my business that was producing revenue. So I felt like I could take more risk with my stocks because I had the business that was my 9 to 5, more my secure job. So that strategy might not work for everybody, but it worked for me.
Works for me.
And now I still totally am about this strategy. I mean, I buy like some Tesla stock. I don't buy a ton of stock. One of the things that I'm looking at now is diversifying more into dividend paying stocks. So looking at like Dividend Aristocrats or Dividend Kings. Actually, if you want to go ahead and hit the subscribe button, I've got a new video coming out here pretty soon where I'm going to set up a dividend portfolio on M1 Finance. So I've got some money sitting in cash right now inside my retirement account that I've had custody to M1 Finance. So if you want to see what that portfolio is, be sure to hit subscribe so you can check that out. Now, one of the things that I love about investing, especially with all the different online platforms and investment apps that exist today, is that you can dip your toe in the water. You can cut your teeth on investing with fractional shares, with small amounts of money. Whereas before, I mean, you needed at least a decent chunk, but now you can get some real world experience on buying stock, buying ETFs, I mean, even trading options, which definitely is a high risk strategy, but you can test that out with small amounts of money so that by the time you actually have accumulated some wealth where you actually now have thousands, if not tens of thousands of dollars to invest, now you've kind of just got all of that testing out of the way so that you don't go broke trying to leverage some high risk strategy and lose everything that you have. So there's no denying the impact that investing in stocks, investing in the stock market has had on my financial life. So that is the first investment. The second investment, when I started to really break it down, I mean, I could talk about investing into my business, I could talk about investing into my online business, but when I really started thinking about what has had the greatest impact on my net worth, had the largest impact on my financial status, it was investing into my brand, into my online brand, investing into my personal brand. And I just started thinking about some of the best investments that I've made. And when I think back in time, one of them was becoming a CFP or Certified Financial Planner. You know, this was an investment of my time. It was an investment of my money. And when I got that investment, for those that don't know, if you're a financial planner, you don't have to become a CFP, a Certified Financial Planner. It's something that you do on your own. It's basically like going back to school and you've got to study and take a really hard test and you got to pass it. It's like a 2-day exam, and an exam I really thought I failed the first time around. Luckily I didn't, but it's something that you don't have to get. And once you get it, like, you don't get a pay raise, but what you do is that you get this certification, you get the credentials behind your name. And I often compare it to, you know, not anybody, but you can become an accountant, you know, you can prepare taxes, or you can become a CPA, which basically just means that you're more legit. You know, you've got more experience, you have more knowledge. And that's what the CFP designation did for me. I was young at the time and I was looking for something to help me stand out from the competition and really just kind of solidify to clients like, hey, I'm serious about the process, I'm serious about what I'm doing. And I'm showing you that because I went through the process of becoming a CFP. And when I shared with them like the requirements to become a CFP, and like it wasn't an easy thing, like they were impressed. And that was one of the beginning investments into my brand. Then I thought about investing into the website, investing into my business cards, investing into cameras and all the equipment I have for my YouTube studio right now. Like, these were all investments that elevated my persona and elevated my expertise and helped me really stand out from the competition, whether it was in the financial services industry or stand out in the online space. Because at the time, like, there weren't a lot of CFPs that were bloggers. There weren't a lot of CFPs that had a YouTube channel or a podcast. But the fact that I was willing to invest into a designer and a developer and all the equipment that went along with creating this online brand, I mean, that has yielded, I mean, gosh, I can't even add up like how much it's truly made me. And other ways I've invested into my online brand was becoming a better writer, investing into relationships, investing into my networks where I could land writing gigs with Forbes and Business Insider and CNBC. All of these things took time and effort, and oftentimes I'm wondering, like, is this even worth it? Because like when you write for these bigger sites, like you don't get paid. Like, they don't typically send you a check for writing for them, but what you do get is like, oh hey, so-and-so has been featured on CNBC, and then they can see your bio and your byline. You can see that you're featured on these big media publications, and once you get that, like there's just this certain perception that you get. Like people just automatically like, oh wow, you were on CNBC, you were on Forbes, like that's impressive. And these are just a fraction of all of the different ways I've been able to invest into my online brand. But what makes these investments so hard for a lot of people, and it was hard for me in the beginning, and there's some days it's still hard, is that there is no easy way to quantify what is the ROI, what is the rate of return on these investments. And that's why oftentimes people don't take the risk. They're not willing to invest into these intangible assets because they can't quantify it. It feels like a sunk cost. It feels like it's an expense. It feels like it's a waste of money. So they just don't do it. And they just keep doing the same old stuff that isn't working. And that's why many people are broke or stuck where they're at right now. Now, the cool thing about the two different ways that I've been able to invest into myself, for myself to become a multimillionaire, the cool thing is that it's not exclusive to me. It's not exclusive to your neighbor. It's not exclusive to your coworker. It's not exclusive to your second cousin that you don't invite to the holiday party. No, these are available to you. You can invest into the stock market, or you can invest into your brand. Either which way you invest, if you want to do one or the other or do both, either one you have availability, you have access to today. So what are you going to invest into? What do you need to start investing so that you can become financial free? Maybe you want to become a multimillionaire. Maybe you want to become a decamillionaire. Hell, if you have a goal to have a larger net worth than me, then go get it. You have those capabilities. What does that look like for you today? All right, y'all, hope you enjoyed this video. If you did, you know what to do. Like, subscribe, all that good stuff. Until next time, this is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome. Until next time, peace.